Global Information Briefing, morning of December 17th. It's all major news. Over the past 24 hours, global financial markets have exhibited a pattern of precious metals consolidating at high levels alongside a divergent and weakening stock market landscape. The lingering effects of the Federal Reserve's policies, expectations of a Bank of Japan rate hike, and key upcoming economic data have emerged as core influencing factors, accelerating the pace of asset rotation. Precious metals. The precious metals market continues its strong trend. Spot gold consolidated around $4,300 per ounce, with London gold fixing at $4,313.55. COMEX gold futures closed at $4,333.70, just a step away from the all-time high of $4,381.48 set in October. The fundamental drivers supporting gold remain intact. The Fed cut rates by 25 basis points to 3.5% to 3.75% on December 11th and initiated light balance sheet expansion, reducing the opportunity cost of holding gold. Global central banks have been net buyers of gold for 13 consecutive months, with 2025 net purchases projected to exceed 1,200 tons, providing long-term structural support. Unlike gold's steady climb, silver has outperformed notably. Spot silver traded at $63.873, up nearly 120% year-to-date, far exceeding gold's gains. This surge is driven by global inventories hitting a 10-year low, surging industrial demand from photovoltaics and electronics, its inclusion in the U.S. critical minerals list, enhancing strategic value. The gold-to-silver ratio has dropped to 67.33, reflecting silver's relative strength. However, with the U.S. non-farm payrolls data pending, precious metals are in a phase of technical consolidation, and market sentiment remains cautious. Global equities, stock markets showed clear divergence. U.S. stocks, the Dow fell for a third consecutive day, closing at 48,114.26, minus 0.62%. The S&P 500 dipped 0.24% to 6,800.26, while the Nasdaq edged up 0.23%, highlighting sectoral splits. Tesla hit a record high, boosting some growth stocks, but AI infrastructure stocks faced pressure. Broadcom plunged 5.59%, and Oracle dropped 2.66%. European markets were relatively stable. The UK's FTSE 100 rose 1.09%, led by resource stocks, while Germany's DAX and France's CAC 40 ended slightly higher. Asian markets underperformed. China's Shanghai Composite fell 0.73% to 3,361.49. Hong Kong's Hang Seng Index dropped 1.54%, led lower by gold stocks. Japan's Nikkei 225 tumbled 1.6%, weighed down by Bank of Japan rate hike expectations. Markets are focused on the December 19th policy meeting, where the probability of a hike to 0.75% now exceeds 80%, potentially triggering yen carry trade unwinding. Macro perspectives. Post-Fed rate cut, policy paths remain debated. While the dot plot's 2026 rate cut expectations fell short of market hopes for more easing, Chair Powell's emphasis on employment downside risks offered dovish support to assets. The Nasdaq plans to extend trading hours to 23 hours daily, with a proposal to be submitted to the SEC next week. If approved, this could reshape market liquidity structures. Commodities. Oil prices weakened, with WTI crude falling 2.89% to $55.18 per barrel, reflecting caution about the global economic outlook. Most industrial metals pulled back, contrasting with precious metals' strength. Key upcoming focus. U.S. non-farm payrolls data will directly sway Fed policy expectations, impacting precious metals and equity markets. Bank of Japan meeting, December 19th. A rate hike could trigger a global asset revaluation. Watch for risks from yen carry trade unwinding.